Hope all of you are well and enjoying a really, really nice sunny October morning. It's certainly a glorious day for us here in Auckland, and we're hoping that the rest of you, wherever you are, have got a good day ahead of you as well. We're delighted to be back in our offices. This has been our second or third week of actually enjoying our neatly and nicely refurbished new offices. Great surroundings. I wish I could promise bird calls outside, but all I can hear is the sound of jackhammers. But never mind. This session is being recorded, so if you want to review or listen to it again, or have someone else who wants to listen to it, it will be up on the website early next week. If you have any questions, you can use the chat room function, but you probably find it might be easier just to text through one of us, myself, Larry, or Mark on that. Well, I guess we have to start with the obvious. What a year. 8 months ago, if you'd said what was going to happen, given where we were, you'd think we were all crazy. We had Simon Bridges confidently expecting to be our next Prime Minister. COVID was just a blip on the horizon overseas, and investment markets were doing really well. Since then, of course, we've had a complete change around politically. We've had investments go up or down. COVID has been and gone twice and possibly may come back again. We don't know. Well, to make sense of all of that, we're going to start first of all with Larry, who's going to take you through a bit of an investment update.
Looking at the sparkling Waitemata Harbour from our new upgraded offices, and trying to avoid looking at Peter's face, which is only a few feet away from me. So my role is to give you a bit of a client-based experience of the last 9 months, and I've been trawling back through a lot of portfolios, as well as doing my own research, as you would expect, on just what our situation was pre-COVID, before COVID was even a word in our recognition, let alone in our language. And as Peter's referred, what a 9 months it's been. But in looking at the majority of our client portfolios, and I know we're being watched by a number of you, there would be at least a break even with the end of December last year, and if not slightly positive. And so that's not a bad recovery in terms of what we were expecting. It probably is slightly ahead for a complete recovery of portfolios to at least the position at the end of December 2019. That is basically the international share markets, along with ours, having clawed back significant returns from March 31st, in the middle of March perhaps, to September. There was a little bit of a down trail in September, and then they've been roaring along this month. So we've been watching those and conscious of whether we come back to you on a constant basis with the recovery, but you get reports, you get communications from us, and hopefully you're feeling encouraged and aware that we are looking at things on a constant basis for you. So I was just going back because it's always good to look at what economists and commentators say in the past and then check it off with what is the current situation. And we think that our economic commentaries, which come out to you quarterly, there's another one due to come out to you this afternoon, in fact. I'd encourage you to read those because they can be a little bit lengthy. The one mid-year was, but they're quite punchy in terms of what they do deliver in not just what has happened, but in predictive stuff as well. And the one that was in mid-July, I just got here and I was reading through, and it talks about if you went back to 1998, which is within all of our memory spans, I would suggest. It's not that hell of a long at 22 years. And just following the 1997 share market crash, and what you would do. Would you have bailed out? Would you have gone into hiding and not emerged in your man cave or woman cave or whatever cave it was and not done a damn thing? And if you had done that, you would still have money in the bank, which might have earned you 4.5%, and now would earn you 0.5%. And you, in a net and certainly a net real situation, you would have gone significantly backwards. So if you'd done that, and no one would blame you, you would be significantly worse off to what you would be if you had stayed the course, or if you were adventurous, have actually put more money into a very volatile situation. It's not a lot different to what we have experienced this last 9 months for very different reasons. We've never had quite the pandemic worldwide that we've had this time round that's affected share markets, which are no one's particular fault. We had faults with the bond crash and with oil crises and what have you in the past, but this has been no one's fault. It depends on your political viewpoint as to how you might view that statement. But nevertheless, it is similar effects, and the recovery has been similar to 1997, but sharper fall, and certainly a much stronger recovery. So I'm delighted because I plot these things a little bit differently to other people, and the American markets are all but 3-4% away from being at a record high. Our own market very close to a record high pre-COVID. So we are looking at a better result for our local market, not quite so the Australian markets, but on a worldwide basis, very, very strong recovery in that 9 months time period. And our portfolios better than that again, because we've had a balance with most of you. We will not put everything into shares, as you would expect. We don't advise that. And so the balance of bonds, holding some cash, holding some even term deposits alongside your international shares and New Zealand shares has meant that you are in the black altogether. Share markets not quite, but your portfolios since the end of December would be now in a positive situation, or at worst a neutral situation to where they were then. So it's not all bad. And Mark and Peter and I are going to come back and just address not so much on the New Zealand election, but you've all heard ad nauseum on that, but the future ramifications of both that, and of course the big news in town is the American election coming along in just 2 weeks' time, and voting already started with that. So that is a more major happening, and will cause some volatility, will cause some opportunity over the next 2-3 months, far more so than our local election has here last Saturday. So pass back to you, Peter, and you might like to invite Mark to join us.
Great, thanks, Larry. So now I'll bring on board Mark to give his spin on a couple of issues which have come out.
Thank you, Peter, and thank you, Larry, and welcome everybody. Hopefully you can hear me and I'm not on mute. I think I've just unmuted myself, so that's all good. Nod from Peter, that's good. So a couple of things that I wanted to talk about. It's more around the themes that we've seen as a result of this pandemic. And, we've had, what about a 7 or 8, 9 month period now since it also began from China. And during that time, the one key obvious thing that we've seen as a theme is very, very low interest rates. Not obviously just in New Zealand, but globally. So what's been really interesting is the coordinated approach by all central banks to keep those interest rates very low, not just in the short term, but to ensure that over long periods of time, those rates are going to continue to stay low. And interestingly as well, and I know this quite well because my wife works at a bank, the Reserve Bank have been ensuring that all banks have the ability and the technology to be able to cope with negative rates from next year. So that is quite a serious approach that they're taking, where they've never really done that in New Zealand. They've done it overseas, but clearly they feel they'd like that in their armor to be able to use if it's required. Now, of course, that may not necessarily mean that term deposit rates are going to get into negative territory like maybe 1 or 2 countries in Europe, but it still means that the interest rates are going to stay low, and it's a clear intention to keep them as low as possible for as long as possible to make sure that the country has the best opportunity to recover. in addition to that, the Reserve Bank have also putting in place I don't know if you've heard of this, but it's called a funding for lending program, which they're looking to introduce by the end of this year. So the idea of that is to encourage banks to be lending out to businesses and to the public to help recover and help that recovery in the next year or two. So that means it's going to protect those margins for the banks, and there's no excuses for them to not on-lend that to businesses and to individuals. So again, that's going to keep supporting the economy, and again, an indication they'll do whatever it takes to make sure that the economy can continue to recover post this pandemic. Now, of course, with interest rates being so low, people are left with the option, well, what do I do with this money? You know, we've got people are coming off what they thought at the time were quite low interest rates of 2-3%, now looking at what they can get to renew their term deposits. And really, if you look at it from 1 to 5 years, they tend to be hovering around that 1%. So if you factor in cost of living increases, you're really not going anywhere. So of course, people are looking at, well, what are the alternatives? So that's helped with the property market, that's helped with the equity markets, but also with those good quality corporate bonds as well, because they're quite attractive compared to what they can get elsewhere. So that's helping the markets be supported. So the key thing around that is around interest rates are going to be low for a very long time. And it means that people are going to look at where are the alternatives that they can invest that money to make sure that they're actually growing in real terms rather than going backwards. The other thing that I wanted to talk about was this shift that we're seeing within New Zealand and globally to remote working. And we obviously had to get into this very quickly with the lockdown and changing alert levels and getting used to that. But the second lockdown was quite easy for us because we'd been through it once before. And so what I found, certainly talking to people that I know in the different businesses around New Zealand, is that's become quite normal now for them to continue to be able to work from home as was working in the office. So when the lockdown happened, it was a pretty seamless transition. And so we've seen companies actually coming out and announcing, saying that their employees can now work remotely if they want to. So there's a change in mindset now about, do we need to be in the office? It's good to be in the office for a period of time to make sure that teams get together, but it doesn't necessarily have to be all of the time. And if you look at Europe, and I obviously being from the UK have a vested interest around the UK and Europe, they've got a constant issue around COVID. It's not just something that's going in and out of lockdowns. They've got these constant lockdowns that are in regional areas or sort of nationally. So they're actually having to adapt to this on an ongoing basis. There's no other option. So there are a lot of businesses working from home. So there's seen this real change for businesses looking at how do we take advantage of this remote working. And so you see some of the companies that have benefited from that remote working, so such as Chorus. If you look at Chorus's performance for the last 12 months on their share price up until the end of September, it's a 71% increase. So that tells you really there are some real winners from this change in mindset about how people are going to be working and conducting business. Not only that, you've got healthcare as well. Healthcare is obviously going to be very important in terms of the technology equipment that's going to be needed, and obviously, hopefully, a vaccine that will be coming very soon. So again, if you look at Fisher & Paykel Healthcare for the last 12 months, it's over 90% increase. So, you know, there are some real winners. Of course, there are going to be some losers in there with the likes of tourism operators, retail operators, because it's obviously just a situation they find themselves. It's not really going to be very helpful for them. But there are going to be some winners in there as well, such as the likes of Chorus and Fisher & Paykel Healthcare, as well as some other companies as well. So I guess the key thing for me to remember on those two sort of areas is that you need to remember to be diversified. Of course, all of our portfolios have got broad diversification, not just in different regions around the world, but also within the sectors they're in, a broad base of companies. So you're always going to be able to benefit from some of those winners that come through and emerge as a result of a change that's going on. And finally, just a reminder, when I met with a client a couple of days ago, it just reminded me of money that they'd earmarked for overseas travel, which of course they can't do and probably not likely to be able to do for a while. They decided what we're going to do with this money that was earmarked for that travel. And they decided they were going to upgrade the car, they were going to do some work on the house that they've been meaning to do for a long time. So even though that money is not going to overseas travel, it's still feeding its way into the economy. So it's still going to be just spent in different ways. So that helps support the local economy, and that will be the same in other parts of the world as well. So that's again why you see the market seeing through all of this uncertainty that we're going through at the moment, and remembering that we will get through this, and business will carry on, and life will still carry on. But finally, I just wanted to finish on one quote that I'd come across recently, which I think is very, very important, especially when there's so much happening on a day-to-day basis. So the quote is, "Read the newspaper to be an informed citizen, not for advice on how to navigate financial markets." Because that's not what their job is to do. Their job is to actually keep you informed and tell you what's been happening or has happened, not what's going to happen. So with that, I'll finish up and hand you back over to you, Peter. Thanks, everybody.
Great, thanks, Mark. And that's a great session to actually have. One of the things that we're aware of too is that whenever you have a big change in economics, there's always a reallocation of resources that goes through. And we've probably seen that, as Mark's mentioned, in terms of some companies that have done well, some that haven't done some well. It's a form of creative destruction, I guess it's been called in the past, and we're probably going to see a bit of that. Final bit I want to talk about is essentially what happened at the weekend with the election, and what the market has responded to it, and a couple of picks that we've got for the future. I guess being evidence-based, we want to avoid all the various commentaries. You've probably read and heard enough of that to keep you going for a while. So what do we know? The first thing we know is that Labor has an outright majority. So it means they can govern alone. They don't need any other party to actually work with. Second thing we know is that for the past 3 years, it is a fairly centrist government. It's similar to the Key English or Clark Cullen governments from that perspective. While special votes are still a week or two away from being counted, they won't affect the ultimate result. And in fact, the evidence from the past is it's likely to favour both Labor and the Greens by about a seat each. We also know that Jacinda Ardern has said two things categorically that will not happen. Firstly, she's ruled out a capital gains tax as long as she's Prime Minister. And secondly, she's ruled out a wealth tax. One could argue, well, of course, that could change as soon as she steps down, but it'd be a brave man or woman who would like to bet on that happening anytime soon. We actually do have a form of capital gains tax in New Zealand, have had so for a long time. If you're a trader in anything, you pay gains. So if you bought and sold cars on a once-a-year basis, you don't pay tax. If you bought and sold cars every week, you do pay tax because you're a business. That's always been there. So that's probably the one thing that's always been in existence. If we had to think of what would happen to investments as a whole, the share market as a whole has gone nowhere in the last week. It's the same, the NZ X50 is the same point now as it was a week ago. That tells us the market has said, yeah, no, nothing much is going to happen, move along here. One area that we think there might be a change in the future is, of course, when the government looks to reduce the deficits that's going to be running. And that could be in the form of some form of expansion of some form of pollution tax or an environmental tax as the most likely scenario. It probably won't affect the farming sector too much. You might recall last year, the government negotiated an accord with the farming sector as to when it brought farm emissions into the emissions trading scheme. But it could affect other things such as transport and possibly industry. This could be something that they might look to expand and may not realise a lot of dollars initially, but possibly a little later on. Ironically, the more successful they are at reducing pollution, CO2 emissions and so on, the less they're actually going to get from that sort of tax. So I guess it's got a sort of natural sort of ceiling or life expectancy for that. But that's probably the only one that we're actually going to see or hear. That's probably all that we really want to say on the elections, because from our perspective, it's something that the market will play out as we see. As you know, we being evidence-based, a lot of the information is already in the share prices, as both Mark and Larry have alluded to. So it's from that perspective, we just have to wait to see from, in the future. We'll know the results of who the government will be formally in 2 weeks' time, but more likely probably next week when they decide what they do. And the rest we'll just have to wait and see. Any final words, Larry or Mark?
Not from me. I think just a reminder for everybody that if you read something in the papers or there's something that somebody said that you're concerned about, we're here as well to provide that that person to bounce your thoughts off. So yeah, remember that we're always around if you need to talk to somebody.
Great. Well, I'd just like to then thank you all for listening in and viewing this. We decided to make it short and punchy to last the length of your typical cup of tea or coffee and morning tea. As always, please feel free to get in touch with any of us if you've got any questions, want to pick our brains, or just want a friendly chat. Enjoy the rest of your days. Thank you very much for viewing and listening to this presentation.